Hey, good afternoon, everyone. This is Hector Aguilar. I want to welcome you back to our monthly live video recordings where we're bringing you a ton of value add information if you're someone who's in the market to buy or even if you're in the market to sell. Today, I have the pleasure of welcoming back one of my good friends, someone that we brought back to the show in the past, Jennifer Zamora. Jennifer Zamora is the Vice President of Community Lending and Diverse Markets for Bank of the West. And I understand, Jennifer, that you recently got a promotion. So tell us a little bit about yourself and a little bit about the promotion you just received.
Oh, of course. Thank you. Thank you so much. Well, thank you for having me again. I'm
Yes.
excited. Educating the community on, home buying is my passion. That's what I love to do. And that's actually where the promotion pretty much that all around that.
Okay.
Education and home ownership. I have been in banking for the last 17 years. So I have done everything that you can think of under the sun and landed
Awesome.
on my feet in mortgage about 8 or 9 years ago. I love it. I love mortgage. And about a year and a half ago, I was tapped on the shoulder to bring in education, just come over and apply what I was doing already with the low to moderate income community and diverse market, right? With the
Okay.
under the whole CRA umbrella, and just take that on here in Southern California. So I run the community lending diverse market kind of area team for Southern California and Nevada. So
All
Fresno down
right.
to San Diego and Nevada
Nice.
is what I cover. Uh,
Wonderful. Well,
part,
congratulations. That's awesome.
Thank you. Thank you.
So,
It's
so
exciting.
Southern
Thank you.
California, tell us a little bit about what that area entails. And I think you mentioned that Fresno's part of your area and then all the way south to San Diego County, if I'm not mistaken.
Correct.
So
Correct. So
you oversee the
anything
entire area.
that's me.
Wow, that's a
Under
pretty big territory.
it really is. It's a little exhausting, and I live out of a suitcase sometimes,
Right.
but it's amazing. The
You know,
amount
and
of
it's
people that you can touch
mhm,
and really get educated on the different areas, right?
mhm,
Being me being an LA baby, right? This is what I know, but just going out and seeing the other areas of affordability is amazing because it just gives us a little bit more insight on how we can educate our buyers.
and promote mainly is the goal is to promote and facilitate home ownership, right?
100%.
Awesome. So one of the things I wanted to talk to you about right now is, of course, is let's talk a little bit about buyer sentiment, right? What are you seeing in the industry? And then I'll share a little bit of what I'm seeing in the industry right now, and maybe since last May when the interest rates started going up. But what are you seeing in terms of buyer sentiment right now in the purchase market?
Buyers are a little afraid, right? Rates went up, so that scares people.
Correct.
So they're afraid of getting themselves into something that maybe they can't afford later on. But what
Correct.
what I what I say, Hector, all the time is you're going to get into what you can afford right now at the higher interest rate, right?
Right.
And if you can buy something and get yourself and start paying yourself instead of paying 100% interest when you're renting, right? It's
Correct.
easier and better to do that. If
Absolutely.
anything, you're in a payment that might be a tad bit high right now, but once interest rates start calming down, you can refinance, and that's going to be so much easier for you to, it's going to be
Absolutely.
easier on your wallet, on your pocket.
And I couldn't agree with you more. I think buyers in general are a little bit afraid because interest rates are higher. I think also they think that the market's going to come down in terms of price, and we'll touch on that a little bit as well. But the reality is that rents are also going up, right? There's a lot less properties currently for sale. Currently, owners that are in properties and have been in properties probably have a 3% interest rate. And what I'm hearing from sellers that I'm talking to right now is they really don't want to sell their home and then have to go buy something at a higher price and at a higher interest rate. So they're holding fast. So what that creates, it creates a lot of demand, and it creates a lot of investor sentiment too, in the terms of in the sense of, hey, I'm going to hold on to this property. Maybe I'll put some equity out, buy something else, but I'm going to rent it out because rents are high, right? And so
Yes.
you touched on it. Is it's better for a buyer to get into a payment that's a little bit higher than what you're used to, but guess what? You're not paying 100% interest. You're paying yourself. You're paying down an equity on your loan, on your mortgage, on your property versus paying your landlord's mortgage, right? And I think when
Correct.
buyers kind of wrap their heads around that, they're going to decide to get off the fence because the truth is, I've been helping a couple lease clients over the last couple months. And honestly, there's nothing in the LA County area or even San Bernardino County area that's under $2,800, $3,000 a month. And so when you compare that to, let's say, buying a house for $500,000, your payment might slightly be about $4,000, but you're owning. And in addition to that, you also have the opportunity to take a tax deduction on your mortgage interest you're paying every single year, which helps you get a bigger refund every April when you file your taxes. So I agree with you. I think buyers are definitely scared. They're a little
Yes.
nervous. They feel uncomfortable with the interest rates at where they're at right now, which is hovering around 7.25. Gosh, when I got into the industry back in 1991, interest rates were like 12, 13%. I was a mortgage banker, much like you were, and I was refinancing people out of 16 into 13s, 13 into 11, and then slowly coming down to like 9 and 8%. So I've seen these rates before, but maybe the new buyers have not. So I can see that they're a little scared for sure.
Just to go back and compare when you got in and the rates were there, home values were still probably a little bit more affordable than what they are today. But
Absolutely.
it's going to balance out. It's going to have to balance out, and we kind of see that hopefully within the next 6 to 12 months. We'll see one of them has to balance out because
Right.
we just can't get our community into homes. The other
Hmm.
thing I wanted to touch, I love that you said that rents are at 2,800 to 3,000, right? So
Hmm.
if you're paying $3,000 in rent today out
Correct.
there, in 12 months, you're paying your landlord $36,000, right, to
Mhm.
help build their wealth. And in
Right.
5 years, you're paying $180,000 into somebody else's pocket.
What a
So,
magnificent point. Absolutely great
ah,
point.
I love bringing those numbers up because I don't think that we see that, right? Our community that rents right now, I don't think they see that number.
Right.
They're just paying their monthly 3,000, not knowing, oh my God, I can do this for myself, and build that 36,000 could help you build your wealth, right?
Absolutely.
That's definitely going
And
to help you.
and you and I both know that the majority of wealth is built through real estate, right? So when you bring up
Oh yeah.
those numbers, you're talking $36,000 in 1 year. You're talking about $180,000 in 5 years. Just think about that. You're paying yourself $180,000 in building equity, and the market's going to help you build some equity as well. But there's no way you're going to be able to save $180,000 yourself if you're putting it into like a CD or a savings account. That's the power of real estate. And I think that most buyers, most renters really need to understand that, right? The second thing that I think buyers are a little concerned about is down payment. You and I both know that historically the biggest challenge for a buyer to be able to get into a home is their ability to save enough money for a down payment. And that's what I wanted to talk to you about right now, right? Because you're the vice president of community lending and diverse markets, you're really in tune with many of the down payment assistance programs, and that's something that we wanted to talk about today. Is give us an update on some of those down payment assistance programs that you're currently familiar with, and more importantly, because you're in Fresno County and you're in like Riverside County, San Bernardino County, where we're now starting to realize that those are more the affordable areas because downtown is expensive, LA County is expensive. So now we have to start looking outside the county into counties that have more affordable prices. And so those are some of the programs you're going to start talking about today. One of the first ones
Yes.
that you know of, and you mentioned, was the WISH program. Tell us a little bit about the WISH program and what it provides.
The Wish program is actually one of my favorite programs because it is a grant. So when you hear the difference between down payment assistance, it can be a second and a loan, and you have to pay it back after a certain amount.
Right.
And we'll get into that with another program. But the
Mm-hmm.
Wish grant is actually forgivable after 5 years. So this is
Wow,
why
that's
it's my
awesome.
favorite. Every year it forgives a little bit more, and once you get to the fifth year, it forgives the entire thing is forgiven. You don't have a lien on your property. You're done.
Fantastic.
So 29,172 is pretty much the max that you can qualify with the Wish. Just last year was only at 22,000, so it
So
increased a
they
lot.
increased
I'm excited.
7,000 right now from 1 year ago. That's fantastic.
Yes. So it does require a contribution from the client. Again, it's a 4-to-1 match. So the client needs to bring in at least 7,250. Now we know you
Okay.
probably will need a little bit more than that in order to
Right.
get that payment a little comfortable, but you can. You must be a first-time home buyer. You have to complete the home buyer counseling. And again, it's fully forgiven after 5 years. Now, this is income based. Fully
Okay.
income based. So you have to make 80% or below the area median income.
So it's
If we're
just
talking
for truly affordability, right? They have to be at an 80% of the median income or below to be able to
correct.
qualify for the WISH grant. Okay.
Yes. So I brought up some numbers so that we know, so everyone out there can kind of, LA County, if it's a family of one, if it's just you're buying your home by yourself, you can't make over 70,650 in order to qualify for the program.
Was
Now,
that
the
70,000?
70,650.
Okay.
Now it increases as your family increases. So a
Mhm.
family of four in LA County can make up to not more than 100,900.
So 100,900. Okay.
Correct. Now we're going to go out, right? Because affordability is what we're seeing more in the Riverside, San Bernardino area. So if
Mhm.
we're out there, family of one, you can't make over 52,200, and a family of four, you can't make over 74,550 to qualify for the Wish. The
Okay.
other thing I love about Wish, Hector, the other is it can be layered with anything else. They don't care if they're in second position, third position, fourth position. You can
Mm.
layer this with any other program that's out there. So one of our other programs that we're going to talk about is the one that's in Riverside that can give up to 100,000. But can you imagine if you're going to bundle that with now 29,000? What you need to bring in, plus maybe our grant that we'll talk about at the end, which is
Mhm.
another 10,500. I mean, we're talking about $149,000 that
That's a
you
lot of
can.
money. That could be the difference between buying a $500,000 house and a $650,000 house.
Yep.
So keep that in mind. That's a great program.
Yes.
You also mentioned
Yes.
that Riverside County, and
Yes.
the reason why we're talking about Riverside County is lately, in terms of buyers and what they can afford, I've been showing a lot more property out in like Murrieta, Banning, Beaumont, Colton, even San Bernardino County, like Highlands, San Bernardino, up in the high desert, Apple Valley, Hesperia, Victorville. These are counties that are currently still affordable versus LA County properties, right? So talk to us a little bit about what Riverside County is offering in terms of up to 20% or $100,000, and how does that work?
So this program is something brand new that we don't even we're not approved with it here at Bank of the West BMO, but it is coming. It is coming, and other banks have it, and I definitely needed to let the community know about this program. So again, 20% or up to 100,000. That's how much they're going to help with the down payment.
Wow.
It's yes. So this one, what I love is the income is a little bit higher. It actually goes to 120% area median income.
Awesome.
So
Awesome.
in 2022, and actually, no, they're still going based off of 2022 numbers. A family of four in that area can make up to $105,600 and qualify for this 100,000 up to $100,000.
Nice. Nice.
What I
How is that
love
hundred
about
thousand
these
dollars being repaid? Is What are the terms behind that 100,000?
there's zero interest and it's deferred for 30 years.
Okay.
Hmm.
So if they refinance, then they would pay it back?
If they do a cash out refinance, they have to pay it back. If they sell, they have to pay it back.
Okay. And is there any type of co-ownership or any equity
No
requirement
equity
in terms
share.
of that?
No equity share on
So
this
no equity
program.
share. That's positive. That's
No.
amazing.
Yes.
Equity share.
Yes.
I know with for example with the Cal HFA and their short Dream for All program, they were giving up to $100,000, right? But they were also asking for an equity share, and many buyers were a little uncomfortable with that, right? So it's nice to know that this particular program doesn't require that.
Correct. And I'm loving that. I love that you're asking all these questions. And for the community out there, ask the questions because I actually had a client that was in an equity share, wasn't aware, right? When she did her loan about 22 years ago.
Oh
And
wow.
now at the time that she wanted to refinance and get into the lower rate, right? And pull a little bit of money to do some upgrades. This is about 2 years ago. She had to pay back about $180,000.
Wow.
So it didn't
You
make
know,
sense
there,
for her to
it's
refinance that.
interesting because I want to talk about that, right? Let's address the elephant in the room, right? If there's equity share to that part of the down payment assistance programs, I tell my buyers, listen, don't be afraid of that, because what does that mean? That means that out of every $10 you get to keep $8. And out of every $100 you get to keep $80, right? So sometimes they always look at the glass half empty when really they should be looking at the glass half full. They're getting into a home with less money down, right? They're getting into a higher price property that's going to give them a lower payment, right? Because they're getting, a down payment assistance program. And in time when they refinance and sell, they're still going to keep 80% of that equity, right? So it didn't really
Correct.
cost them anything. And I think many times we get lost, or buyers get lost in like, oh, well, I have to give, the county or the program 20% equity. Yes, but look at the bright side. You're building your own wealth. You're paying down your own equity, right? You bought a property for you and your family, and you established your dynasty for them. And yeah, in time, when you find yourself in need of either refinancing or selling, hey, Mr. and Mrs. County, thank you for your help. Here's your 20% plus what you lent me, right? And
Correct.
many of these programs, like you mentioned before, has 0% interest rate. So it's really like free money, right? So I wanted to touch on that because many buyers kind of hang their head on that. Well, I don't know if I want to do a 20% equity share. Well, the truth is that you don't have an opportunity to buy this house unless you use this
Unless you do
program.
it.
So,
And
I
you
like
have
to
to,
think about that.
and the community, you have to be smart with it, right? Let's use it. Don't stay in it for 22 years.
Mhm.
Where now you've built, $600,000 in equity, and now it's going to hurt. Use it, and when you're ready, ask questions. Go to your lender, go to your
Right,
professionals that are out there. Hey, when should I refinance? Is it a
right.
good time now? Should I pull out this cash now and pay them back? Do it as soon as possible. But yes,
So,
definitely use the programs out there because they're there for you.
absolutely. Like you have a great point. I have a client right now who we got into a property in the city of Pomona with their $100,000 program
Mhm.
about 3 years ago, right? And now the equity's gone up, and now he's got enough equity where he can sell his property and move up into maybe a bigger home or a nicer. He's got another little baby on the way, so their family is growing, and so now is a time to think about, okay, now I have to, but they've only been in the program 3 years, so that equity share isn't going to be as heavy as if someone waited 20 years or 30 years,
Yeah.
right? So that's
Mhm.
totally understandable. And remember, most people don't realize that the home that they're going to buy, their first home, is just that, it's their first home. Things
First
can change
home.
in the next 5 or 7 years. Statistically, people will move every 7 to 10 years. They'll move property.
Mhm.
So it's not meant to be long term, but it's a great tool to get you into a house. So that's
And
those are amazing programs.
I'm glad that you said that because you're right. 7 to 10 years, right, for them to
Mhm.
maybe sell. But mortgage on the mortgage industry wide, you're really going to stay in that mortgage for maybe 5 to 6 years.
Right.
At that mark, you'll either refinance, sell the property, pull out some of the equity in it to do
Mhm.
a little, little things there. But
Repairs, pay off your
historically,
debt, things of that nature.
six, yes, six
Yes.
years.
So
So
you're saying that
don't be afraid of it now.
the average life of a mortgage, even if it's a 30-year mortgage, is 6 years, right?
It's about 6 years. Hmm.
You're percentage wise, every 6 years, people are going to either sell or refinance, and you're going to pay off that loan and do something else. So I
Correct.
think it's important to mention that because maybe people will hang their hat on saying like, "Oh man, it's a 30-year mortgage." Well, yeah, but every 5 or 6 years, you're going to need to do something. Historically, people will pull equity out to fix up the house or pay off their debt, or even buy another property. So
Buy another property.
don't
Mhm.
think that it's long term. You can make moves anywhere between 5 to 6 years. So
Correct.
let's talk a little bit about the city of Santa Ana's program because I think the city of Santa Ana has a great program. They're
Yes.
giving up to $120,000, right?
Yes.
And in some areas, there are still some pockets in Santa Ana that are reasonably affordable, right? That's changing a little bit as the market's getting a little stringent. But talk to us a little bit about the city of Santa Ana's program.
So this program I actually love because there's additional caveats to help pay this off without anything coming from the buyer except for what they borrowed, right?
Okay.
But it is again first time home buyer. You have to be one. You can borrow up to 120,000. That's going to be for the low income household, and then 80,000 for the moderate income household. Which I love that they use low and moderate because on most of the programs you're going to see low, which is 80%
Right.
or below. This goes up to moderate. um, the client needs to have at least 3% of their own funds in order to qualify. All of these programs you're going to have to do an 8-hour home buyer seminar, right?
Correct.
So sometimes you'll find nonprofits that do that for free. Like I at least once a month I partner with Operation Hope and we do an 8-hour seminar for free.
Okay.
But that's one thing that you would need for this program. And the home must be located in Santa Ana for you to qualify. But look at the income difference, right? So if you're going to buy in Santa Ana for a family household, now remember I told you in Riverside County you couldn't make it over 74,550 for the Wish program, right?
Right.
But in Santa Ana, to qualify for $80,000, a family of four, you have a max income limit of 142,900. Now
Wow.
we're talking. Now we can buy something, right?
Yes.
One
That's
for
within
income
someone's.
of 142, and they're giving you 80,000. We're gonna find something for you out
We're
there.
definitely going to find something for sure. That's a great,
what
great
I
program.
the one thing I wanted to point out about this program, and when when the representative from the city came out and just explained it, she was so excited. So if you went to school in Santa Ana and graduated from one of the schools I'm sorry, and graduated from Santa Ana High School, and then went on and got a 4-year degree, it's actually forgiven. So there's an incentive to that this loan will be forgive. Yes, if you went to Santa Ana High School and you graduate the 4-year. I apologize, I don't have the notes on how long it'll be, but it is a forgivable loan. So $80,000
Fantastic.
that you don't have to pay back. It's
That's
forgivable.
amazing. I mean,
Isn't
who
that
wouldn't want free
great?
money, right? And what a great way to promote, their local education and also promote, higher education to their community, and be able to forgive an $80,000 loan. So that's a great program.
Mm-hmm.
Talk
Yes.
to us a little bit about, we've mentioned other counties, right? Like Riverside County, San Bernardino County. You mentioned Fresno County. And let's talk a little bit about why are we exposing those counties? Why is it the reason that we're having those counties in our conversation right now?
So, again, affordability in Los Angeles is a little bit tough. It's a little tough right now,
Yes.
right? We're talking, $600,000 home in South Central. It's just a little tough. Now you go out and you spread your wings. Now I've been going out to Fresno quite often because that's one of
Okay.
the areas that I cover, and one of the areas that really needs the focus and the education on affordable home ownership. You're looking at homes that are 5 bedrooms out in those areas that are still under $500,000, and they're in great communities. Now these communities are just building up. Every time that I go to Fresno, something new has popped up. There's
Right.
a Chick-fil-A or whatever it is, right? Another Starbucks.
Right.
So
It's
they're
interesting.
really
I like that you mentioned that Fresno's continuing to grow. And one of the things that local cities are focusing on, like, for example, Murrieta, Colton, and Beaumont, Banning, is many of those cities are focusing on developing industrial warehouse and industrial parks. Why? Because they're looking to create jobs in the local community, knowing that families will now need to relocate to these other counties and maybe some outer boundary cities where it's more affordable, right? And so what's the biggest concern for a buyer that's maybe going to buy in Beaumont but has to go and work in, let's say, downtown? The biggest thing is the commute, right? Man, I'm going to have to be on the freeway for an hour and a half, maybe two. And so many of the cities are doing a really good job of developing their commercial locations and industrial locations to keep jobs locally. So I'm glad that you mentioned Fresno, because it all comes down to affordability, right? As you mentioned, right now,
affordability.
the median price in the LA market is going to be somewhere around 625,000 or more. And with those down payment programs and with the down payment and interest rates the way they are, traditionally, I think payments are going to be somewhere around the $4,000 to $5,000 a month, right? So that starts becoming a little bit of a, can I really afford that? Is that really within my budget? But with these down payment assistance programs, you can get a house with the more
Yes.
affordable payment because it's helping you borrow less from your main bank, from your first mortgage. So tell us a little
Correct.
bit about what you're seeing in terms of price differences and payments. I know we were running a couple scenarios earlier.
Yes, yes. So I wanted to go back to something that you said on the industry and these different industrial companies making a difference and making a move. So personally, to me, my dad bought about 14 years ago in Moreno Valley, and he did the drive to Vernon for him and my stepmother for about 11 years.
Wow.
And just this year, his company moved to that side of town. So his commute went from 2 hours to and 2 hours from to only about a 20-minute drive.
Fantastic.
So yes, but on top of that, just to let you know, in Moreno Valley, he's already purchased his second home
Right
in
on.
14 years because
That's
that
awesome.
was where he could go and he could afford, and now he built
Right.
the equity. So
Mhm.
pretty. I just wanted to touch on that.
No, that's good
But
because
price
people need to
differences.
know. I think people need to hear like real life stories of people that have experienced that, right? I think for most people, there's a big influx of commuter workers that come in from like Apple Valley and Hesperia and Moreno Valley and Beaumont, and yeah, they're willing to spend 2 hours, but it's good to know that the industry is moving to those outer cities, so maybe they can shorten up their commute and maybe find other places of employ if their current company isn't moving. So it's a great point.
Yes, yes.
So talk to us about the
So you
Fresno
were
County
saying,
program.
so the Fresno County program is 20, it's going to be similar to what you're going to find in Riverside. So 20% or up to $100,000.
Okay.
It is going to be 80% of the income. So we're at those lower numbers, right? That we were talking, but the cost of living in Fresno isn't as expensive as the cost of
Right.
living here in LA. So
I agree.
you would find that is more affordable. The homes out there, I mean, I was just there. We're talking about maybe $350,000 for a nice 2-3 bedroom.
Hmm.
So it's still super affordable. Fresno, just like I said, Moreno Valley, it's up and coming. School districts are much better. You, it's just a remarkable area. Every time that I go down there, you see something else coming up.
Right.
So, again,
And I think
we wanted to
it's
bring
very
those up so
similar.
that
I think it's very similar to homes that are currently for sale, like in Hesperia and Victorville and Apple Valley. Although I'm seeing prices in those markets now hit the 450s, 500s, and so yeah, I think buyers need to consider maybe outside counties that are maybe a little further out, right? Even Lancaster and Palmdale is a little bit pricey now. It's hard. You're hard pressed to find anything under 400,000 in those markets, and so it's good that we have Fresno County and maybe some other counties that you service in Southern California that are a little bit more affordable. So if you guys are definitely in the market to buy and you guys are thinking about maybe relocating, reach out to us. We'll see if we can plug you into a county program that might be able to give you some money and also expand your buying power. So last but not
and
least, let's
don't
talk a little bit about. Go ahead.
before we move on to my favorite program because it's mine. Don't forget, your first home doesn't have to be your dream home. So if you have to
Right.
relocate for a couple of years to build that equity and save that money, then maybe you can come back. I've seen it happen many times.
Right.
I mean,
Right.
I did it. I bought it in a city that I didn't want to live in, and it was a little shoebox. But
Mhm.
three years later, I was able to buy in the city in Whittier where I wanted to buy, and
Right.
happy camper.
It's interesting. A lot of times buyers they discount like townhomes and condos. Those can also
Oh,
be entry
don't.
level properties that are priced far less,
Mm,
right? You have HOA fees, but you're probably saving money because you're buying closer into town to your work, so you don't have to spend money on gas. And it's again, you're going to live there 2 or 3 years. Maybe as you pay down the equity, maybe the market helps you with some market increase in value. You're able to sell that and then buy in the cities that you truly want to and get into your first home. So I think many times buyers kind of pigeonhole themselves into an area. They say, "Wow, this is going to be my forever home," where the truth is that it's not. It's just a stepping stone. And if they can keep their mind open to that and use one of these programs, I think they would, benefit themselves greatly by buying a home today, right?
mhm.
Let's talk about your favorite program now.
So I'm excited about this program. This lender credit is something that Bank of the West worked really hard on. Now, I used to work here a couple of years, and I came back about a year and a half ago, and they were talking about it then, right? So it is a lender credit for 10,500. It is in most counties here in Southern California, and this is a lender credit, so you don't have to pay it back.
Nice.
You get it. That's it. That it is a one-time gift that you'll get at closing. What I love about the program that a lot of my bankers have been using is helping buy down the rate with
Right.
this 10,500. So if the rate today is at 7.25, depending on how the market is, we can get that down and use this 10,500.
Right.
What I love about the program that not a lot of different DPAs have is that it's either your 80% AMI, which again we looked at those numbers, that's really hard,
It
or
is.
the property itself is in a low to moderate census tract area. Now,
Okay.
every city has little pockets. You would be surprised. The
Right.
other thing is most of these programs, you have to be a first time home buyer. You couldn't, you, if you were an owner for, in the last 3 years, you don't qualify for most of these programs. With Bank of the West Lender Credit, you do not have to be a first time home buyer. You just have to be purchasing a primary residence.
Right. So let's define that because most people don't really know what a first time buyer is, right? Like, uh,
Mhm.
and you briefly alluded to it. It's anyone that hasn't owned a home for the last 3 years can qualify as a first time buyer. Now, what does that
Correct.
mean? That means I owned a home and 5 years ago I sold it, and for the last 3 or 4 years I've been a renter. Well, now I can still qualify as a first time home buyer. But if I owned a home last year and I just sold it, I do not qualify as a first time buyer until that time period is at least 3 years. So
Correct.
the difference between your program with the Bank of the West Lender Credit is that whether you've owned a home in the last 3 years or not, you can still get that credit, correct?
That's correct. That's correct.
Wonderful.
On just a side note, I know this is for first time home buyers and DPAs, but on a side note, this program we also have a certain amount to refi. So if you want to refinance, if you're in that low to moderate income census tract or area, or your income's
Oh,
80%
wow.
or below, we can give you $4,000 to help towards your closing costs.
Oh, nice.
Again, maybe buy down the rate, right? If you're
Absolutely
looking
right.
to pull some of that money out.
For
So
sure.
that's
I
what I
think
love about this program.
that's a great program because right now, again, the sentiment is most homeowners that are in a 3% interest rate, or let's just say they're 3.5, they still have a little bit of hesitation of maybe refinancing or doing something financially with their equity because now the rate is 7%. So maybe you can do something and maybe with that credit be able to buy down your rate and still keep an affordable payment. Great
Correct.
program. Well, I think with today, my main goal was to let buyers know that there's still an opportunity to buy, right? And despite the interest rates being higher, I think it's important for them to understand that financially, it's absolutely important for them to buy now, right? There's an added saying, when is a good time to plant a tree? And it was probably 20 years ago. And then when's another good time to plant a tree? And that's today, right? So my message to buyers, our message to buyers is don't sit on the fence and wait. I think most buyers are thinking that the market's going to crash. Just yesterday, Elon Musk kind of chimed in and said that there's going to be a big crash in the housing market. And the honest truth is the numbers aren't showing that. And what do I mean by the numbers? Inventories are still low. There's not enough houses in the market for the amount of demand, for the amount of buyers. Now, buyer demand isn't what it was 2 years ago, maybe 3 years ago. Sure. But there's still buyer demand. Why? Because rents are high. And buyers are realizing that I don't want to pay a $3,500 or even a $4,000 rent payment. If I'm going to do that, I rather buy. And so that's why we're starting to see that. Like I said, I was showing property to 2 or 3 of my buyers this past 10 days, and I was in a multiple offer situation. One of the properties that we made an offer on, we went 20,000 above asking. They opened escrow at about 55,000 above asking. So we're starting to see that again. That small window that we experienced at the beginning of the year where sellers were like, I'm willing to pay for some closing costs. We're not seeing that anymore. So we're not just saying to encourage you to buy because we want you to buy. No, we're encouraging you to buy because it's the best financial decision you can make for you and your family today.
100%.
Without a
100%.
question, right?
100%.
So with that said, if you guys are in the market, you guys are on the fence, if you guys are thinking about it, reach out to me. Let's get to connect it. Let's get you on a calendar. Let's have a buyer consultation so that we can connect you to the different down payment assistance programs that you might qualify for and see if we can help you buy a house. I want to personally thank you, Jennifer, for spending the 30-40 minutes with me today. As always, you bring amazing value, great information, and I like that you're definitely an advocate for home ownership in the low to moderate income families. So thank you for your
Of
time.
course.
Anything
Sí
that
se
you want to add
puede.
before we go?
No. Just, ask questions. Don't think you can't do it. Set a plan. Maybe you can't do it today, but if you set a plan, you may be able to do it in 6 to 12 months. But you
Yes.
have to get your questions answered and believe that you can.
I'm glad that you mentioned that because a lot of buyers also think about, well, my FICO score isn't that high. But a lot of times, what may not be high to you is still a FICO score that we can work with, even with the down payment assistance programs. There's programs that will finance you like at 620, 640, 660, 680. So even if you think that your FICO score is low, get together with us. Let's have a buyer consultation and let's get you on a path. If it's not today, it could be 3 months, it could be 6 months, it could be a year. But guess what? You're going to be a homeowner within a year or less. And that's our goal, is to help you be a homeowner. So thanks again for
Yes.
spending some time with me, Jennifer. I really appreciate it. I look forward to our next update in another 6 months, see if things have improved and maybe other programs that come to market. In the meantime, if you guys are in the market to buy or sell, please reach out to me. My name is Hector Aguilar of the Aguilar Realty Group here at eXp Realty. And we'll see you next time. Take care, everyone.
Bye, everyone. Thank you, Hector.
Thank you.